your host, Efi Pylarinou, and today I'm delighted to have with us a wonderful, inspiring woman, Carmelle Cadet. Welcome, Carmelle.
Thank you so much, Efi. It's a pleasure to be here.
Carmelle is the CEO and founder of Mtech, and Mtech is all about technologies in central banks, for central banks in emerging markets. We, of course, will have the opportunity to talk more about this. I was intrigued with both the company and Carmelle, and I reached out to her to learn more about her background. I know, Carmelle, that you have spent most of your career at IBM in financial services, if I'm correct, and I'd like to hear from you a little bit about your background, that journey that led you to jump out of the corporate world and into the startup world, and also, you know, of all startup sort of subverticals, why this one?
Thank you so much. Well, I'll start from the beginning and then go quickly to what led me to start Mtech. I am originally from Haiti, born and raised. Became a political asylee for many reasons. If you know anything about Haiti. But the moment I landed in the US, I became fascinated by the financial market and financial services and how that impacted everything that we did. Whether it was the first advice that my mom got and say, make sure you get a credit card because this is how you build your credit and your credit score is everything. And having kind of getting us into that cycle has been really a journey, but learning along the way. So coming from a grossly underbanked and unbanked background, or at least where I came from in Haiti, that has a 27 to 25% banking penetration rate, it was for me just a fascinating idea on how can we build stronger, more inclusive financial markets around the world. I think everybody deserves that, regardless of how much money you have, regardless of your background, regardless of if you're a woman or a man. But I couldn't do anything about it then. I was only 17. I listened to my mom, went to school, and ended up having a 10-year career at IBM. And while at IBM, the appreciation for how technology can impact lives became something that I really got attached to. IBM had a role of being essential as a technology partner and invest billions of dollars every year in making sure that our lives, even if we don't see the IBM brand, our lives are running behind the scenes. So for me, I really got excited about learning how technology can do that. Then I went on to build a career in the corporate finance. I graduated in corporate finance at the time. And so I got to see, how do you commercialize software? How do you commercialize enterprise software? How do you create value for clients? And how do you scale? How do you exit? How do you acquire? And then got into treasury to do about risk management. This was a career development for me, opportunity for me. And that's when I got put at in the front row, if you will, of understanding the liquidity risk, FX risk, counterparty risk, country risk.
Wow.
And the idea
I hear those words, Carmelle. I have to interrupt you because, you know, these words, that the liquidity risk and the counterparty risk, are so much at the heart of every single crisis. And I don't think that will change, that it's like a very essential training.
It was. I didn't know it at the time, but it sure was. And then went on to understand how capital moves around the world, how different legal and accounting rules made finance look around the world and the requirements around that. But I didn't stop there. I took that experience and then got the blockchain bug, if you will. So married the two, and here I am, and helping launch IBM blockchain division at the time. We got very excited about the concept of stable coins for cross-border payments. But we went to the first regulator in the US and they said, what the heck is a stable coin?
And was that, what year was that?
That was 2017, 2018.
Okay. Okay.
Yeah.
Okay.
So that was the very beginning. And then little did we know, JP Morgan announced a JPM coin. Yeah. Life changed. Central Bank of Bahamas said that they were looking for a blockchain solution to help them modernize their payment infrastructure. So you bring all of that together, kind of my experience, my background coming from Haiti. I had a passion about solving for financial inclusion and getting everyone access to resilient and inclusive financial markets, because that could impact their world in many beneficial ways. And then you kind of, after sitting through 2008 and really after 2008, understanding liquidity risk, counterparty risk at a global level, I got really excited about the idea of how can we use blockchain to digitize cash? How can we solve for cross-border payments more efficiently? And I saw the opportunity. I left IBM and started Mtech to help central banks modernize, because I realized I had a choice. I could have introduced another app or another, blockchain solution, another protocol. But the big problem that no one was really talking about is really the infrastructure that really ties it all together. So we saw that as an opportunity. I got really excited. People ask me if I'm crazy. My mom still asks me if I'm crazy. But it really became exciting once the light bulb went on.
Amazing, amazing. And I understand that you've been spending all your time in Africa with African central banks, starting with Ghana and Nigeria. If I'm correct, I understand that you spent Thanksgiving with the Central Bank of Nigeria. Yeah, that makes your mom think that you're crazy. I can understand that.
Yes. So I started, however, with the Central Bank of Bahamas, just because as they were launching their CBDC at the time, it was very exciting to be able to support them, thinking about cross-border payments. The team is doing a really good job working with the Central Bank of Bahamas, so the NZIA team that grew and was able to win that opportunity. But then, yes, I did my exit interview from IBM from Kenya at the time. I was already on the road by the time I decided to leave. And Africa for me came in two folds. One, I was able to travel to Ghana in 2018, seeing the ecosystem in Africa. If you've never been, I would highly recommend that you attend even a tech event in Africa that has to do with fintechs and regulation or innovation. Is just absolutely undeniable what the opportunity is, what the talent is, that there is demand, and everyone is figuring out what the supply should be. And then now McKinsey this year published a report around the opportunity on financial services in Africa. You have so many just characteristics and in the stage at which the countries are, and some of their KPIs and performance, or what their trajectory is around median age, around being able to the education level, especially after COVID, that everyone is getting an education online. You're having a growing pool of talent that is hungry to innovate, that is entrepreneurial by default. And financial services is at the core of everything else. So I think that's why you're seeing investors, you're seeing the markets and the focus around fintech in Africa, because the infrastructure has not yet been built. Everyone
Carmelle, let me share with you that, here in Switzerland, where the blockchain ecosystem is one of the top global blockchain ecosystems, not only for finance, blockchain in general. And there's an annual report that CBVC, the Crypto Valley VC, puts out every year around blockchain. And I think this year, they issued a report dedicated to Africa and blockchain. It's the only country that they have done that for. It was just amazing to see that the opportunity there and what is being built and what will be built continuously, because it's a huge opportunity at the infrastructure level.
No, absolutely. I'd be curious to see if they covered Africa as the whole continent, or if there's even a country that they have a focused on, because Nigeria has grown to be not only the largest market, but the innovation and the adoption of cryptocurrency as well has made it very interesting. So, and every country across the continent is experiencing different stages, different development stages, and different needs. Ghana is very different from Nigeria, although they're brotherly neighbors, right?
Yeah.
And
but in Nigeria, Carmelle, I was looking at some numbers recently about the high adoption rate of cryptocurrencies there, and it's non. I mean, there must be a part that's speculative, but most of it is not, and I understand it has to do with the lack of dollars. And therefore, anything that's imported, and it's a huge economy that imports, it's facilitated through cryptocurrencies. Is that correct, or what is the main reason for this?
I mean, I think it definitely speaks to the fact that there are macroeconomics factors that the users have been drawn to alternative forms of currencies to facilitate cross-border payments specifically.
Yeah.
I think the ease of use and the talent that exists in Nigeria have been able to prove out and build solutions that make tapping into Bitcoin in a safe and sometimes unsafe ways possible.
Yeah.
And what you're seeing is a combination of things, right? So of course, I spent a lot of time with my team locally, and the dynamic of macroeconomics is not something that everyday people wake up thinking about. We do, because this is what we decided to do for and trying to solve for. So of course we do the research. But when you have a country that that imports and that imports a lot and outside of their currencies, they end up having to service and pay what they're buying in US dollars versus their local currency. And the more imports you have, the less and less your local currency becomes useful to you, but because you need something else because you're buying from somewhere else. And one thing that I try to, and we want to put more efforts around the education around that, macroeconomics education 101 for people kind of walking down the street, right? And the more you use another country's currency to do your day-to-day business, in a long term, it's not also the right balance, if you will. The dependency, the debt servicing, because the other country's central bank is not thinking about that dynamic when they're printing and determining how much to issue, right? So you might end up having a whole country, especially something like Nigeria, where there's such a large economy, needing independent on the US dollar. And it's just a supply and demand issue at some point where you don't have enough supply anymore. And whoever has the supply is going to ask you for a lot more to give you what they have. So the premium on top of that. And then sometimes you just flatly run out because it's limited issuance. The central bank, the Fed does not wake up every day and just decide to print more money. I know Bitcoin really looks at how do you limit issuance, central bank money is also limited, right? It has to be big, major policy, monetary policy efforts to issue more fiat. And that adds to the problem where you're finding people looking for other assets. Because Bitcoin does not solve the problem of unlimited printing either, right? So when you run out of Bitcoin and when you don't have people being able to sell enough Bitcoin, you're going to run out into the same problem that you have with fiat. And those are the points that make it very interesting. But I think what you're seeing is a need. It's clearly a need for better liquidity and more supply.
So how is Mtech addressing any of these problems, and is it using blockchain technology? What is it solving for? Because I understand it's a Regtech. So give us a picture of what you're adding to these problems and the challenges and the frictions that exist in the system.
Absolutely. Thank you for asking, because I as we're growing, where we are now is a very different story from where we started, if you will. I started with the idea of how can we help central banks put cash on blockchain to solve financial inclusion by design. It was always at the core, kind of using blockchain to say you can build a digital cash infrastructure. So that was the next stage for us, using the protocol to provide open infrastructure on distributed ledger. Then we went from private distributed blockchain solutions into finding Hedera Hashgraph, that around the same time that we were founding and we were growing, was building and has invested and been dedicated to building a protocol that sits on a public ledger, that is also permissionable, permissionless, and really taking the conversation further on being able to tokenize any asset on a public ledger that can be managed through a private network, if you will, all being public. It's a new mix of capabilities than what we were seeing in the early blockchain days. And we tested that. We took some time to understand the protocol, and we really like what we saw. But as we were doing that, as the protocols and the innovation and the growth of blockchain protocols was happening, we heard something else. We heard the central banks also telling us, look, this is an amazing opportunity. If we're going to solve the financial inclusion problem, however, we have a fintech kind of issue that we need to deal with. And we have a regulatory environment problem that we need to deal with. And sometimes what you see is that some central banks kind of issue their CBDC, and there's no ecosystem to really embrace it and push it through.
The adoption, you're talking about the last mile adoption.
Correct, the last mile adoption. And so if you launch a CBDC today and you want to solve financial inclusion, bringing that CBDC to the banks is not going to solve your financial inclusion problem, right? Because it requires the banks to still develop strategies and how they're going to get to the last mile. They already tried. We know how that story went. We're here, and Fintech has stepped up because the gap really existed. The change in technology is not going to change that. However, what the change in technology provides, and the reason that we got anchored into using a token-based CBDC and deploying a token-based CBDC, is because the value that people are finding in Bitcoin and cryptocurrency is absolutely viable. It's viable. It's real. You can understand why people want something seamless and borderless and easy to move with very little guardrails, if you will, on who can use it. However, they were finding out, right, they don't want the volatility that goes with that. That's why you got stable coins that got introduced to solve that problem. And there lies kind of my background into risk management, right? I spent a lot of time helping to protect IBM against counterparty risk, meaning where do you put your money every day? Who do you borrow money from? And who do you lend commercial paper through, kind of thing? Is the financial institution going to be there a year, 2 years, or even tomorrow when you go to sleep? You know, I wanted to go to sleep waking up knowing that our money, my job was to make sure that our money was in a safe place, and I wake up tomorrow and the money is still there. And same thing for the purpose when we start a stable coin. Should you have one stable coin? Should we have tokenized deposits? Is the technology enough to change the business model? Or is there an opportunity to adopt new technology and also look at new business models that can scale? So this is where, again, we see a gap in the counterparty risk of stable coins. However, it really taps into liquidity. When you have a system that is not, that you don't have to wait T+2 or 2 days for settlement, or you have to wait 9 to 5 or the weekends to make transfers, you get really interesting scenarios around liquidity. Can money move faster around the world? If we're not going to have unlimited supply of money, because we know the economic impact of that, can we tap into the speed and the velocity of money to make it go around faster? What is the additional margin that we can get? And I think that's untapped value. So in order to do that, however, with CBDC, we needed to help central banks address how to grow their ecosystem. Who can get access to CBDC? And what we stumble on, we have 6 central banks in West Africa who has been asking us to help them build an integrated regulatory sandbox so they can all coordinate together on, while respecting each of their development stages, how do they deploy digital tools to understand digital fintech solutions and have better visibility for risk management. And that's where we looked around. The regulatory sandbox is something that central banks and regulators have been tapping into over the past 5 to 10 years, but there was no tech for that. We looked around and there was literally no technology that. And that was for us an opportunity to build a platform. So fast forward to today, what Mtech platform is going out to be is an integrated platform that connects central banks and financial service providers together for the purpose of what central banks do. They do regulatory oversight on one side, and they print digital, they issue currency on the other side. So on one platform, we enable central banks to do that. On the other side, we imagine a growing ecosystem that wants to engage central banks to either get their regulatory license and sandbox done, but on the same platform, they can also get access to CBDC wallets, CBDC APIs, and now you have full visibility for risk management, for better ecosystem engagement in a seamless way.
Wow, so that means that instead of, let's say that one country, Nigeria has their already their CBDC, right? The electronic Naira, right? But they wouldn't know how it would work cross-border. And now you're providing that sandbox, at least for these Western African central banks that are participating, and they can all safely see how this works. And are you in this sandbox, is it only commercial banks that are participating, or also fintechs?
The fintechs actually are the first groups to come forward, because that's where the gap is for the central banks around understanding regulatory framework, getting more visibility now into what fintechs are doing. And what they're trying to address is that the fintechs are becoming bigger than banks sometimes. So instead of sending a fintech to go work with a bank, there's a de-risking that happens if you're a regulator and you can see the risk directly by having the fintech, licensing them and working with them and helping them grow faster to do their regulatory reporting.
Very interesting. So right now, this sandbox that you have created has 6 West African central banks, and then there's fintechs that have joined. Are there any names of fintechs that you can share with us in the sandbox, or not?
Not yet. And we will be announcing some of the some major fintechs that we're working with are already seeing the opportunity on how do they engage the regulators sooner in the journey of innovation, for example. So two key use cases that we're really excited about. If you are a crypto exchange, if you are providing crypto services or want to issue a stable coin, we're working through the central bank to help them have virtual asset regulatory reporting APIs. That's going to be very interesting on how do you help central banks, even while they don't have formal regulatory frameworks in place yet, but come to the sandbox. You can grow into the sandbox. Sandbox does not mean you do only 10 transactions a day, but it's about the visibility. It's about the embedded supervision, if you will. And the BIS speaks a lot about that. So we're using APIs on how to help embed regulatory supervision through data exchange, right? It's not that the central bank wants to see everything and every detail of every transaction. Usually they want to see the market performance, the activity level. That's already data that the regulators get anyway. And then the second use case is about how do you bring your CBDC to your ecosystem? If you look around today, and I know you're probably familiar with all the different deployments, there are no open CBDC APIs. Every deployment so far has been very private and closed. We are big believers on using open banking standards, open platforms, public ledgers that still provide a lot of privacy. It's about transparency, but not lack of privacy. And how do you make that available to an ecosystem that is hungry for innovation? That is looking what can I do with CBDC? How can I use CBDC? What does CBDC mean for me? And I think you're going to see a lot of banks. That's why you're seeing banks joining conversations now. There's still a lot of resistance, I think, on their side, but we're seeing more and more fintechs coming forward and say, can I embed CBDC for digital cash payments? Even if someone is unbanked or banked, if they want to keep some of their cash in the bank and they want to keep some cash on them, instead of paper cash, they can have a digital cash wallet. And merchants and e-commerce and new use cases should be able to accept that over time. So I think that's going to be very interesting on how you bring the ecosystem with modern regulatory frameworks to make sure that the infrastructure in the private sector is growing while bringing your CBDC to the ecosystem as the currency for them to use.
Wow. I mean, this is very important work that's been done, because, I mean, I always think that just issuing a CBDC it's like you write a book, that's like 30% of the work. The work starts afterwards, right? So how do you get it to market? How do you link with the existing system, whether it's the commercial banks, the fintech providers, and the last merchant or even user? And it seems to me like you are not only providing the sandbox, but are you building these connectors that you spoke about, the open connectors, which now are between the central bank and the fintechs, and tomorrow they can be for others?
Absolutely. So we got selected as part of the digital dollar sandbox with the digital dollar project in the US. And we are leveraging our open APIs, so CBDC APIs, for the sandbox participant to test with our CBDC, and us being able to showcase the results. And the platform is also open. So yes, absolutely. That's something that we take a lot of pride in.
Yeah, I can imagine. Tell us about this. I know that you were invited to which committee was it, at the financial committee, to discuss
the
the
Financial
dollar?
Services Committee. That's right, in the U.S. Congress. Is that what you're referring to last year?
Yes,
Yeah.
yes. So tell us a little bit about the dollar project and where it's at, a little bit beyond what we read in business media, which is not a lot. It's more, on the media side.
Yes, so I'll share that. I think you'll hear more soon publicly. But the engagement for me, I think, is so critical to have a neutral pad, if you will, where the public and private partnership can happen for the purpose of learning and for the purpose of hopefully coming out with a solution. What I like about the Digital Dollar Project is that I think it's really trying really hard not to be just a research project or something that does not end with at least a good contribution to the conversation, right? And what the sandbox enables. So I know there are a lot of sandboxes, so that might be a bit confusing, but the sandbox word is becoming more and more popular. Essentially, what they put together is a special program for their participants to work with technical vendors that are thinking about CBDC, and for the purpose of defining use cases and what are the right case studies that is possible with CBDC. And I think that process really helps the public and the private community figure out what role they play in the ecosystem. So we're pretty clear on what we want to do. So we leverage our CBDC solution right now and simulating the Fed, if you will, or the Treasury. Not all the functionalities are built yet because you don't build everything up front until you kind of go talk to a client and so on. So it's a good educational feedback for us. Here's what we build. Can it work with certain use cases? What use cases can it be a good fit for? And what we're seeing right now is absolutely the open API model makes it so much better for an ecosystem to bring their own app, if you will. And we've seen some models around the world of CBDC providers kind of building an integrated core banking system with the CBDC. In a market like Africa, for example, where you have a lot of fintechs, it's not the right model. It's just not. It makes adoption a lot harder because the banks are saying now, wait, I need to go adopt a new technology, a new core banking system in order for me to talk to the CBDC. That's not going to work. Versus if you give them a set of APIs, libraries, set of APIs that they can pick and choose, how do they integrate? It's just a world of a difference. And I think that can really solve with faster adoption. And eventually also transition, right, to what the central bank really is going to play. And I think you have a question, we were talking about this. What is the role of the central bank versus the banks? The central bank is an infrastructure provider. They don't want to be deposit-taking institutions, right? They don't want to be, and I know there are concerns around CBDC and privacy and programmability. I think I tell everyone, look at the design, look at the ultimate design, and that's how you're going to know what is private, what is not, whether it's a solution that you can trust or not. We're definitely leaning on the fact that we're using public ledger technologies, distributed ledger technology, token-based system, open APIs, so there can be more transparency around who connects to what and who does what for the user.
Interesting. Yeah, I mean, as you said, I wanted to ask you, in your experience up to now, with all these innovations, is the relationship between central banks and commercial banks or licensed fintechs, is that changing? And if so, in what way?
Sure. I think you're having the central banks coming to terms, or at least having to deal with the fact that they have a long line of fintechs outside the door, kind of just banging at the door. And if they wait too long, then they go and launch, exchanges and get millions of dollars from people and lose it all. And not having the proper regulatory framework.
You're talking now in Africa, you're talking about fintechs waiting, not getting a response, and then they go launch crypto exchanges to sort of, or crypto businesses to circumvent the system.
Well, interesting enough, we haven't seen an African-based exchange. I'm talking about FTX, if you will. So I was kind of mixing the two, saying around the world, you're seeing central banks and regulators having more and more requests and more fintechs popping up around the world. So kind of imaginary a line, if you will, around the central bank asking for either licensing. Yes, because
Access.
access to central bank system. You have lawsuits now coming from digital banks, digital asset banks wanting access to the Fed Reserve. So they are inside trying to figure this out while the door is banging, right? And what you see is the reason that fintechs are interested in that is because there's a gap to be addressed and that the banks have not particularly addressed. So I think you're seeing an evolution of what the banks have done well and what the banks do. And I say that I got my first job as a teller, right? So I kind of made my way from teller to mortgage underwriting and so on. So I have an appreciation for banks and with the role that they play. But the fact of the matter is that you just have a 2 billion plus market left that fintechs are raising their hand to go figure out. And I think that's great. So as a regulator and as a central bank, what you're trying to manage now is what is the risk into this new group of ecosystem players that are going after this market? How do you make sure that you have consumer protection, even for people who don't have a lot of money? And just because you are low income and you can maintain a deposit does not mean that you should get false and get into schemes that take the little bit of money that you have and go bet it for you on Bitcoin and then you lose it all. But the regulatory framework is still needed. And I think you're seeing an evolution of what the banks will do, what the fintechs will do. Digital asset services are changing the game compared to banking, staking, yield farming, and all of that. I think those are new services that can generate wealth, provide credit. Carbon market, carbon credit markets I think is an emerging, interesting place where can you generate revenue in a more diversified way if you're a country in Africa or Latin America? Those are very interesting questions. And what is the infrastructure? What is the ecosystem you need to regulate and put in place and provide sound financial clarity or regulatory clarity for them to scale and grow?
Amazing. I mean, I'm really impressed with the fact that we're seeing in emerging markets these collaborative initiatives at the infrastructure level. I really do think that going ahead, I'm very excited about innovation at the infrastructure level, and I think we are there where we're going to see much more, even though it's extremely difficult, but you are one of the players.
It is very exciting. It is very exciting. It seems like a new era is upon us.
Yes.
I look forward to next year and see where, how we take what the foundations and the seed that we planted and how they grow and how they scale.
Yeah, we are very excited to follow your steps. And Carmelle, before we leave, I must ask you, I'm so excited that you are a young a woman from Haiti, and you have taken this path, and I mean, I can't even express my admiration to what you have done and the area that you have chosen. Since I know that you are very much connected in the entrepreneurial blockchain community, and everybody thinks that it's all white guys, but it's not, right? There are amazing women in the blockchain space, blockchain for good, not blockchain for scams. Do you want to share some names that just come to mind?
Oh, yeah. I mean, I'll start with just my closest network. One of our advisory board members, Natasha Bensko-Paul, is from Guyana, actually, and in Central America as well, in the Caribbean, and is a co-founder and the COO of what is, hoping to be the BlackRock of digital assets, for example, being able to redefine how people invest in digital assets safely, again, the infrastructure, the new infrastructure that it takes to soundly and compliantly provide value and increase value for consumers. I really believe in crypto and Bitcoin and the ability to provide people new opportunities, more open, more decentralized access to opportunity. That gets me excited. Decentralization of access. Not that everyone can just print a token and call it money, but you know, for the ones that are good, the ones that do have real utility and can make and bring value to end users, how do you make that accessible? How do you build great products around that? Oh man, I'm blanking out. You put me on the spot, but I have, you know, between when I look at my days doing the IBM days, my two direct reports at some point were women in the blockchain space. So I do think that not many women actually have gone out to be on the stage to talk about this. We really like, I don't want to speak for every woman, but I know I enjoy putting my heads down with my team and with the product team, innovating, iterating, thinking about how to create value. And then over time, my team has, you know, asked me more and more to be more vocal, to be more on stage, to, you know, facilitate panels. I love moderating panels instead of speaking on them. I used to tell them, but it's like, no, now you need to actually be speaking instead of just asking questions. So it's been an evolution even for me. But we'll see. I think as it continues to grow, there are amazing women in this space. You're absolutely right. I think you're an example of how you're engaging different women on what they're doing and how they're breaking their own barriers, and then being very informed and knowledgeable and smartly being able to discuss something so complicated, and but with an understanding that not everyone is there. And I think, you know, when I think about the Blockchain Association, Cleve Messidor is another person I think about. She's based in Washington, D.C., former Obama aide, and on the Blockchain Association in Washington, D.C., every year, even before COVID and during COVID, has made the investment to make sure that the world sees different faces in crypto, right? To say, we are Black women and we're building crypto for good and not crypto for scams. And so please, so it's always a congressional briefing. We go and meet and with congressional members and their offices to say, you know, just remember that there are real people building this stuff regardless of what you hear in the news. And we went there the week after FTX blew up. So it was a very interesting week to be in DC because I think Sam was there a week before and everything changed. So everyone was still kind of in shock of what just happened. And but it was good, right? It was good to say not every crypto project is that. It's important that we have an appreciation for the technology that it uses, and we're building new things.
Great. Thank you so much, Carmelle. Thanks a lot.
Thank you, Efi.